Okay, so this is a look at a really strong bull case for SoFi.
Right, coming off that huge Q3 triple beat.
And it uses that momentum, the record revenue, the gap profitability, to push for a very aggressive $40 price target.
It's an ambitious goal.
So the material itself makes a powerful case. You can feel the confidence. But that $40 target, it's a huge leap from the consensus.
And that's the first big hurdle. The path to robustly justifying that aggressive $40 target needs, well, it needs a lot more detail. The weakness here is that the report kind of treats the $40 target as just an assumed finish line.
Like it's just inevitable because of the 30% plus growth.
Exactly. It doesn't detail the financial milestones you'd need to hit in 2026 to actually earn that massive 45x multiple.
I see. So the suggestion is to basically show the work.
You have to. Stress test that multiple. The idea is to explicitly model out the path to $40, show the trajectory for that $1.035 billion in adjusted EBITDA guidance.
Or connect the tangible book value growth directly to the valuation itself.
Precisely. Show how that $800 million to $1 billion in annual growth actually supports the premium valuation. We need to see the gears turning underneath the headline numbers.
And showing those gears, that immediately runs you into the next big issue, which is the valuation conflict.
The classic bank versus tech problem.
Yeah, the analysis points it out, right? The PE is near 50. The price to sales is 5.5.
Which looks incredibly high for a traditional bank.
And the piece just it accepts that comparison without fighting back.
And that's the critical weakness. You absolutely cannot support a $40 tech multiple thesis if you let the market frame you as a traditional lender.
You have to dismantle that frame entirely.
You have to. The suggestion is to stop being defensive about it and go on the offense. Really leverage the technology platform, Galileo and Technisys, to justify that premium.
So reframe it completely.
Completely. For example, show how a 5.5x price to sales, while high for a bank, is actually, pretty cheap compared to a true fintech or a high-growth SaaS company.
So the argument becomes, SoFi isn't a bank with a tech arm. It's a tech platform that happens to have a banking charter.
Exactly. That proactively neutralizes the whole criticism.
That reframing is a perfect setup for the third point, which is all about the flywheel effect.
Right, the idea that cross-selling lowers customer acquisition costs.
And drives that big 50% jump in fee-based revenue. It's really the core of the entire bull case, isn't it?
It is, but the concept is strong and the evidence is, let's say, a little soft.
How so?
Well, the weakness is that it's all based on percentage growth figures. It doesn't tie that growth directly to the key efficiency metrics that would actually underpin a premium valuation.
Ah, okay. So it's not enough to say the flywheel is spinning. You have to prove it's making the engine more efficient.
That's it, exactly. So the suggestion is to integrate quantifiable efficiency improvements. We need to see the operational leverage.
So, for example, what would that look like in practice?
Well, you could estimate the actual dollar reduction in customer acquisition cost from having all those 12.6 million members cross-buying products.
Or you could show how the net profit margin is set to accelerate.
Yes, specifically because of the scaling margin from the technology platform segment. We need hard numbers that prove internal efficiency, not just top-line growth.
Okay, so this analysis has all the right ingredients, doesn't it? It just needs to connect them more forcefully.
I think so. To recap, there are really three key areas here.
First, fully map out that operational path to the $40 target. Don't just state it as a given.
Second, proactively defend the valuation. Reframe SoFi as a tech company, not a bank.
And third, use hard numbers, real efficiency data, to prove that flywheel effect is actually expanding margins.
Right. Strengthen those three pillars, and this bull case becomes incredibly compelling.
We definitely look forward to reviewing a revised version.